this is your morning brief for Wednesday, April 3rd. Origin House, OH on the Canadian Stock Exchange, not the Toronto Stock Exchange. It's a smaller exchange that has listed a lot of the cannabis companies, actually, is to be acquired by Cresco Labs at $12.68 a share, which is only a 6% premium over yesterday's close, although the shares were up yesterday as well, about 2.5%. So I don't know, we could call that 8.5% total premium, but the shares have been up 200% over the last year or so, and so have Cresco Labs. So I don't want to get too hung up over the premium. Of course, as a shareholder, I'm not a personal shareholder, but I put it into a model portfolio, and some of my clients have actually bought this. So you kind of look for a bigger premium than 6% for sure. But the stock's also been doing quite well, so I'm not going to quibble over it. You kind of lock that in a little bit. Let's just count this as a win. And they've been really working together as strategic partners, like pretty tightly anyhow. It's been kind of operating as one business almost effectively anyways. So a nice little pickup though. I mean, this, like I said, Origin House has been up 200%, and these Cresco Labs has been actually acting well as well. So we're going to see consolidation in cannabis. As we're trying to. It's a bit of a land grab, so sometimes have some scale is helpful. Origin House, by the way, does a lot of distribution in California, so this is a good way to distribute in California. And the headline was something like largest cannabis acquisition in U.S. So there's so many qualifiers there. Largest, first of all, you got cannabis in the U.S., and so we just got to make sure we know what we're saying there. It's not a massive acquisition overall, but in this space, it's pretty big. It's about $1 billion acquisition. Okay. Walgreens shares dropped 12% on missed earnings and weaker guidance. Okay, so I think this is a real problem, and I would not be picking up these shares on this pullback, just like I did not want to pick up shares in CVS when they had a similar quarter. So both these companies have been under pressure, kind of almost like, I don't know what you call it, general pressure to lower drug prices. The whole supply chain has been under pressure to lower drug prices. So why is this so bad now when it's so well known? Well, this is when things are actually coming to like a head or fruition, I guess, the opposite of fruition. It's all just like, oh, it's coming, it's speculation. It's like, how bad is it going to be? We don't know. Well, this quarter, actually, all these rebates from the manufacturers have, slowed way down, been cut massively, and that's why they made a lot of their money just on the rebates from the Pfizers of the world and Mercks and all those things. And those are just getting cut, and now the reality is here. Even though it's been, anticipated, not enough, evidently, because this was a surprise. It missed earnings, and then the weaker guidance, and shares dropped 12%. So I think there's just some more pain here before we find a bottom. Now, I think CVS and I think Walgreens are actually two really good companies, and I will be back at some point. I just don't believe that this is it. This is kind of just the tipping point. Let's let this play out a little bit before we make a move too early. And admittedly, I was in CVS knowing all of these things, and I finally said, no, this could be worse than I thought after the last quarter. Walgreens is now providing us with some more evidence, and I'm a waiter. I'm gonna be I'm a waiter. Sounds like I'm working in a restaurant. I'm gonna wait for a better opportunity. I think it'll come. So good companies, but shift in the whole industry. All right, and last but not least, futures are up. So it looks like we're going to have a decent open. And that's your morning brief for April 3rd. Let's find some gems.